Rental vacancies are ticking down. Apartment rent growth just flipped positive for the first time in over a year. Foreclosure filings are up 14% year over year nationwide, and 878,000 loans are in the distress pipeline right now. If you are a real estate investor who is looking at rental income or distressed deals, the next 5 minutes are going to give you the data that you need to move forward. Welcome back to OpenLane Funding. I'm Robert Homewood, and this is part of our June 2026 real estate market deep dive. Today, we're going to be covering two critical topics: rental demand and vacancy trends, along with the national foreclosure picture. Now, both are directly impacting your deal underwriting right now, and both have major shifts worth breaking down. Let us start with the rental market. The biggest story here is what Apartment List just reported. That national rent growth just flipped from negative 1.5% year over year in May all the way to positive 0.7% in June. That is a 220 basis point swing in just 1 month. That's massive. That's the largest single scale month improvement in over a year. And that matters. The rental market is now turning. Here are the key numbers. National multifamily occupancy is sitting at 94.1%. Single family rental occupancy through Invitation Homes is sitting at 97.2%. Zillow's rent index confirmed at 1951 year over year. That is up 2%. 74% of the rental listings as well are now affordable to the median income household. That's the highest May reading since 2021. That is fantastic. Now, the best rental markets right now are in San Francisco at plus 7.1% rent growth year over year. Yes, San Francisco. We've been talking about it. It's been driven by that artificial intelligence company wealth. Now, Chicago is also still sitting at plus 5.4%. They've been on our list for, I think, about a couple months now. Virginia Beach is at plus 5.5%. Providence, Rhode Island is rounding up at the top tier as well. But here is the deeper signal for buy and hold investors right now. Multi-family housing starts collapsed 41.6% in a single month in May 2026, falling to the lowest level since May of 2020. That means 12 to 18 months away from now, supply is going to be extremely tight. Rent should accelerate significantly heading into 2027. Now, investors who are buying rental properties today are buying ahead of that squeeze. If you are not subscribed yet, hit that button now and go to OpenLane Funding on Facebook for updates like this every single week. Links are in the description. Now, for the foreclosure data, this is where it gets interesting for fix and flip investors. The ADAM May 2026 report shows 4,355 total foreclosure filings. That's down 5% from April, but up 14% year over year. Now, foreclosure starts are up 13% year over year. The important number is the pipeline, right? 878,000 loans are currently in seriously delinquent or in active foreclosure. That's a massive pool of potential for distressed inventory. The highest foreclosure rate stats right now are in Florida, South Carolina, and Maryland. The hottest foreclosure metro is going to be Cleveland, Ohio, and at one of 1,524 housing units. That's massive, which also happens to be the best cash flow market in the country right now. Washington State also remains one of the lowest foreclosure rates at 2.08%, and that's a non-current rate. The Idaho is even lower at 1.94%. So we got a decent market right now. Cleveland, there's a lot of reasons why a lot of lenders stay cold on Cleveland. They don't like that area. High foreclosure rates, that's going to be a massive reason for that. So here's your teaser action plan for you as an investor. Number one, if you're a buy and hold investor, the rental supply data is telling you to buy now before the 2027 vacancy squeeze. Now, number two, if you are a fix and flip investor, the de-stressed pipeline is growing. The REO market just pulled back in May, which means that lenders are now managing flow. But the inventory, it's coming. Number three, if you are financing either a DSCR loan at the best tier pricing, it is still sitting at 5.9% to 6.125%. So make sure you lock in your rate today, because the July 14th Consumer Price Index could change everything. Number four, you gotta be strategic about where you're investing. Now there's lots of opportunity coming in with Cleveland being at the number one foreclosure area, but could you in that area get proper financing? Reach out to me so that we can game plan that exact option. What can we do for you? I'm Robert Homewood with OpenLane Financing. We cover debt service coverage ratio loans, fix and flip, bridge, and new construction lending. Experts are right here in Spokane Valley, ready to run numbers on your next deal. Reach out using the links in the description. I'll see everybody Thursday. If you need any help, please reach out. Thank you, guys.